Hello and welcome to your weekly technical update, your guide to the charts that matter this week. I'm Andrew Gagan. Well, the conflict between Israel and Iran has seen oil prices spike on concern that crude exports out of the Middle East may be hit. This has benefited the largest listed energy player, Woodside, which has reversed its long-term downtrend. Hebi Chen from Vantage Markets analyses the chart.
You can see the price of the stock price of the Woodside has jumping about 11%, and that's adding into the another about 40% since the April low level. So after past 2 months of the steady rally, you can see that the prices now has conquered one is the over 1 year downside trend line, which are putting up the black line here, as well as the 200-day simple moving average, which is the red line here. So I would say that after last week's the breakout, we do seeing that quite a strong bullseye, especially for the long-term one for the Woodside energy prices. Apart from that, I think that one of the key level I'm looking at is that after yesterday's strong rally, you can see the price has been jumping above this crucial Fibonacci retracement level, which I would say that the above this level will helping the price to keep attempting the level above 27 in between 28, as long as the oil price continue to stay hold in the face of the geopolitical tension. On the other side, even a bit of the pullback, which is also likely given that the KTJ has showing a overbought feature for the momentum that potentially will trigger a bit of the short-term pullback. That I were looking at the price at roughly about 26.46 as the major support here. But overall, I think this is a stock that has been benefit quite a lot from the market tailwind, as well as the technical also showing quite a strong bull sign for the long-term outlook.
Well, the Israel-Iran conflict has boosted more than just oil and gas in the energy sector. Uranium has also benefited. Sean Hickman from Market Matters analyses the spot uranium market.
We're very bullish uranium, and if you look at that spot price there, you'd say, okay, it's a classic situation. It had a strong rally for a few years. It had a pullback, quite a big pullback, it's about 40% pullback. Looks to have turned the corner again and be going up. That's a classic move in most markets. If you then overlay that with some of our uranium miners here, it's a very, very different story. They've been absolutely smashed. But uranium, we believe, is the future. The rest of the world, forget Australia, is really running with this one. And every month or two, or even every week or two, we see different companies, whether it be the big Microsofts or whether it be Donald Trump pushing from the US, whether it be Germany, we're seeing ongoing positive news flow with greater and greater demand for uranium down the track. And yet it's not like lithium. There's not a lot of it out there. So increased demand will mean increased prices.
A rising spot price has seen the uranium miners rally. Sean Hickman takes a look at the chart for Paladin Energy, a stock he's taken a long position in, which has proved to be frustrating.
Operationally, they haven't really delivered, but the stock has been, in our opinion, really over-crucified for what they've missed on. This is a big uranium producer, but there's one factor here which people have talked about off and on over the last year. It's got about 15.5% of that stock is short sold. That's huge. And every day we get the moves like now, these guys are going to be getting more and more. They're going to be sharpening the swords to fall on the sword. They're going to be getting more and more nervous. To cover that position could take up to 60 days. So I would not want to be even contemplating being short these stocks. I know I'm long, and it's been a great few weeks, of course. They've had a phenomenal run. It's getting close to doubling off the lows. But doubling off the lows, again, it all depends where you draw the line compared to recent times. We're very bullish uranium. We think Paladin will play some catch up. You've only got to look at the overseas stocks like Cameco, the big ones, and they're trading around their highs. We're just playing some catch up.
And that's it for this week's edition of The Chance to Watch. Join us for more technical talk next week. Happy trading.